We are continuing the chapter Basic Accounting Terms. We already discussed the important terms like business transaction, capital, drawings, assets, classification of assets, liabilities and its classification. Now we'll see which are the other basic terms in this chapter. The next one is trade receivables. We have come across this particular term before. Trade receivables is the sum total of debtors and bills receivable. And you know what is debtor, what is bills receivable. So basically, trade receivable means it is the amount receivable. It is receivable, not received. Amount receivable against sale of goods or services. Suppose you are selling goods on credit. On credit means you will be getting the payment only after a particular period. So that will be termed as receivable for you. So it's the amount you have to receive, that is receivable against sale of goods or services. That's the meaning of trade receivable. It includes debtors and bills receivable. The sum total of these two will give you trade receivable. Debtor, who is a debtor? Person from whom we have to receive money, or person who owes. He owes money to the firm, to us. We are the firm. Bills receivable means it is a bill of exchange. It is a document which shows the amount receivable from debtors. Understood? And also in this bill, they will mention the date on which we will receive the amount. Date and the amount also will be mentioned. What is the amount to be received and on which date you will receive this from debtors. These two will be mentioned in bill of exchange, and that bill of exchange is called, the document is called bills receivable. So similarly, I mean just like trade receivables, we have trade payables, and trade payables will be the sum total of creditors and bills payable. Just the opposite you have to write. Creditors and bills payable. Don't get confused between creditors and debtors, that you have to learn carefully. Trade payables, what can be the meaning? It is the amount payable against purchase of goods or services. If you purchase goods or services on credit, that means only on a later date we will make the payment. That time you have payable, that's a liability for you. So this is trade payables. Trade payables is a current liability. Trade receivable is a current asset. Already we discussed what is current asset, what is current liability. And now the creditors meaning. So this is the sum total of creditors and bills payable. Creditors meaning is it is the amount which we have to pay, that is the amount payable to a supplier who would have supplied goods and services on credit. So person to whom we owe money. We means the firm owes money. Person to whom the firm owes money is known as creditor. Bills payable, what will be the meaning? It is the document or it is the bill of exchange which shows the amount payable to creditor, and the date also will be mentioned just like your bills receivable. And creditors and bills payable, these two basic nature is current liability. It is payable within a period of 1 year. So these two are current liabilities. Okay. Then next accounting term which we are going to discuss is, this is familiar to you, but you need to know what is the exact meaning. Stock, or it can be also termed as inventory. Stock or inventory. Every firm will be having some stock of goods, isn't it? Because they are dealing with purchase and sale of goods. Now stock means it is a tangible asset. What is tangible asset? We already discussed. Tangible asset means asset which we can see and touch. And this was the classification of fixed assets, but stock is not fixed asset. Stock is actually a current asset. What is current asset? Which will be converted into cash within a period of 1 year. We will not be holding stock for more than a period of 1 year, because we have to convert it into cash, then only you can increase your sales. So stock is, basic nature of stock is a current asset, but it is tangible in nature because which we can see and touch. So stock is a tangible asset held by the business either for the purpose of sale, or it can be used in the production of some other goods. Suppose you have some stock of raw materials. That stock of raw materials you can make use of, you can produce some finished goods. So either this will be used for sale, or it can be used for the production of some other goods. So that is the meaning of stock or inventory. It is a tangible asset. Now we can divide stock into two, that is opening stock or opening inventory, and we have closing stock or closing inventory. Now what is opening stock? It is the stock in the beginning of the year. Beginning of the year means usually the firm will be following the accounting period. The period followed by most of the firms will be, it will not be the calendar year, it will be the financial year, which starts from 1st April and it ends on 31st of March. This is the financial year which most of the firms follow. It's not Jan to December, it's not the calendar year, it's the financial year, because budget will be prepared. Government will do the budget for this financial year. So firms also will be preparing the financial statements, or firms also will be following this particular financial year, 1st April to 31st March. And stock in the beginning of the period or beginning of the year, that means stock on 1st April is known as opening stock or opening inventory. Then stock on 31st March, that means stock at the end of the year, that is called closing stock or closing inventory. Then stock includes three categories. One is, three categories are there, that's a classification, that is stock of raw materials, then you can say stock of work in progress, and then we have stock of finished goods. So stock means stock of raw materials, then stock of work in progress means which are in the process of being finished goods. That means that will be in the process of getting converted from raw materials to finished goods. So that is called work in process or work in progress, that comes in between raw materials and finished goods. Then we have stock of finished goods, that means the final product. So all these three will be included under this head called stock. Okay. So that's only, this is the explanation of stock. You need to know only this much. Next we will discuss, so in this chapter we will be discussing terms, only terms you need to study in this chapter. And all these terms are important because when we move on to problem chapters, in your questions you can see all these terms, that time you should know the meaning. When you read this term stock later, you should remember stock includes all these three. Raw materials, work in progress, finished goods. All these three will be included under the term stock. So all these you must remember that time. Okay, next head is, you can write receipts as the next head. Next accounting term is receipts. You can put the number for these terms, receipts. Receipts means the amount received or receivable, both will be included here. Not only the received amount but also the receivable. Receivable means to be received. Like when you sell something on credit, you will have receivable amount. So receipts is the amount received or receivable against sale of goods or rendering of services. That is the basic meaning of receipts. We can classify it into revenue receipts, and we can write capital receipts. So what is the basic meaning of receipts? Amount received or receivable against sale of assets, goods, or if it is service rendering, you can write service. Usually we will be dealing with assets or goods. Now I wrote sale of assets, then goods. Goods means basically the stock which will come under this term asset. Goods or stock, that is also an asset. But when you separately write assets and goods, the meaning is asset is fixed assets, and stock, already I told you the nature of stock is current asset. So here when you write sale of assets, what we mean is fixed assets which will be there with the business for more than 1 year, like building, machinery, land, etc. Then goods means what we mean is the stock, or which is the current asset. So both are different. That's why we are writing assets, comma goods or service. Now the meaning of revenue receipt. Revenue receipt is the amount received or receivable against sale of goods. Against sale of goods, that means this is a current asset. And the next feature of revenue receipt is that it will be recurring in nature. It will be recurring means it will happen again and again. See, sale of goods or services, that is the main activity of every business organization. So that will be recurring in nature. It will happen again and again. So these are the points which you have to include under revenue receipts. It is the amount received or receivable against sale of goods or services, and it is recurring in nature. Example, what you can write is the same thing, that is sale of goods. That is one example. Then what else we can write? Interest which you receive on your fixed deposits. FD means fixed deposits. In your bank you can open different types of accounts. Fixed deposit also you can open. Normally we will be having a savings account. So interest which you receive on your invested amount. All of us having bank account, isn't it? And we would have deposited some amount in bank. And on that deposited amount you will earn interest every month. That means on a regular basis you are getting interest on that. So that is recurring in nature. That can be termed as revenue receipts. Other than that, what you can write is sale of goods. Then what about capital receipts? Capital receipts, amount received or receivable against sale of assets. You can write sale of assets simply. Assets means fixed assets. What they mean is fixed assets, that you have to remember. You can write it as sale of assets also, but assets means fixed assets. So example, what you can write here is sale of any fixed assets you can write, like sale of building, sale of furniture, sale of land, sale of machinery, sale of computer, any fixed assets you can write here. So all these will be capital receipts. And will it happen again and again? No. See, suppose you purchased a building this year. The firm purchased a building this year. That will be used, of course, for more than a period of 1 year. Within 1 year, usually you will not resell that. Understood? So, sale of all these fixed assets will not take place within a period of 1 year. Sale of fixed assets meaning itself is we will be holding it for the more than a period of 1 year. And therefore, these capital receipts are non-recurring. It will not happen again and again. I mean, within a period of 1 year, it will not happen. After some 5 years or 6 years, we will be selling all these. That depends on firm's decision. So, basically that is non-recurring. That is about receipts then. Just like receipts, now we will have to discuss what is expenditure. Expenditure, what we can say is amount paid or payable, or the other terms what we can use in your textbook, you can see these, the amount that the firm spent or the liability incurred. So, expenditure means the amount paid or payable. When will you pay something, or when you have to pay something? When you purchase goods and services. So, amount paid or payable against purchase of goods or services is termed as expenditure, or you can write it as the amount spent or liability incurred. Liability incurred means, suppose you purchased goods and services on credit. So, did we pay the amount? We haven't paid the amount, but we have to pay it on a later date. So, there is a liability for you to pay. That is called payable, or it can be termed as liability incurred. Okay? Or suppose you purchased goods, immediately you paid the amount, that will be termed under spent. So, amount spent or liability incurred against purchase of goods or services. Again, we have classification for this capital expenditure, just like revenue receipts and revenue payments, revenue receipts and capital receipts. Here we have revenue expenditure and capital expenditure. Revenue expenditure and capital expenditure. Don't write it as expense, you must write it as expenditure itself. Expense we will discuss as the next term. There is a difference between these two. So, write it as expenditure itself. Now, capital expenditure, just like we discussed capital receipts, it is the reverse here. Capital expenditure means it is the amount paid or payable against purchase of assets. Assets means the fixed assets. So, what all examples you can write here? Purchase of building, purchase of land, purchase of furniture, any fixed assets you can write here. So, that is the meaning of capital expenditure. And this is the amount we are spending, isn't it? Suppose you spent rupees 1 lakh or 10 lakhs for purchasing a building. Now, the benefit from that building, you will use the building for production purpose, then you will produce some goods, then you will sell that, then you will earn income, then you are getting something back. I mean, the return you are getting. So, for all these, it will take a time period of more than 1 year. Since it is fixed assets, we know that it will take a time period of more than 1 year. So, the benefit will be received only after a period of 1 year, and that will extend to more than 1 year. The benefit what we get, using the building you produced something, then you sold those goods, then you are getting income. Not in the first year, sometimes it can be in the second year or in the third year. Then next years also, in the coming years also, you can earn more income using this particular asset called building. So, meaning is the benefit will be spread over a period of 1 year. I mean, it will be more than a period of 1 year. Now, coming to your revenue expenditure, that is also expenditure. When you hear the term revenue, don't get confused. Revenue means, particularly revenue means something which we are getting, it's income. Here what we are discussing is revenue expenditure. So, it's the amount we are spending or the amount which we spent already. So, it's not income for you. Revenue expenditure means the amount spent or the amount payable against purchase of goods or services. Instead of assets, fixed assets, here what we are purchasing is goods. Goods basic nature is, the basic nature of goods is current asset. Okay. So it is the amount spent or payable against purchase of goods or services, and the benefit will be exhausted within 1 year. The benefit of revenue expenditure will get exhausted within 1 year, whereas capital expenditure, the benefit will be there for more than a period of 1 year, and you will not get the benefit in the first year itself. Only in the coming years you will be getting the benefit. Here you will get the benefit in the first year itself, but it will get over in the first year itself. And capital expenditure, just like we said for capital receipts, this is non-recurring in nature, because every time you will not purchase land, building and all. Whereas this is recurring in nature. See, revenues are recurring. Revenue expenditure, the topic is revenue now. Revenue expenditure and revenue receipts both are recurring, are for recurring. So revenue items are always recurring. Whether it is expenditure or receipts, it is recurring in nature. It will happen again and again. An example what you can write for revenue expenditure is, you can write salary paid, rent paid, electricity expenses paid. All these are recurring in nature, and the benefit of which will get exhausted in the first year itself. I mean in 1 year itself. And these are all recurring. That's the meaning of revenue expenditure. Next we will discuss the term expense. So expenditure and expense, from a layman's point of view, both are same. Usually in our day-to-day life, sometimes we will mention as expenditure, sometimes we will mention it as expense. We will use both these terms interchangeably, but actually in accounting there is a slight difference between these two. Expense we can easily mention it as, it can be the other term of revenue expenditure. So what is revenue expenditure? It is recurring expenses. I mean it will happen again and again, and this is incurred for the business to run easily, and the benefit will get exhausted within 1 year. These are the points we discussed under revenue expenditure. The same thing we can say for expense. So expense and revenue expenditure both are almost same. That means the amount spent against purchase of, not fixed assets, it will be purchase of goods. The same meaning of revenue expenditure you can write here for expense. So example also you can write the same, like salary paid, rent paid, electricity expenses paid, all these you can write here also. So expense, electricity expense. Okay. So expense means it is recurring in nature. It's just like revenue expenditure. It's against purchase of goods, not against purchase of assets. Then this is incurred to run the business easily or successfully. Then the benefit will get exhausted within 1 year. Examples, you can write the same examples that we discussed for revenue expenditure. But capital expenditure means there is a difference. There it is purchase of fixed assets. Okay, so now we discussed trade receivables, then trade payables. You should know the classifications also. Then receipts, expenditure and expense. So go through all these terms, read it again and again. You must know that you need not write the exact words, but these are the keywords which you can write. All these words you can make into sentence. So at least the keywords you must remember. Okay.